Hello ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome as always to one of my videos. And guys, as you saw from the title in today's video, I'm going to be talking about managing emotions as a trader, okay? Now, this is one of the most critical parts to trading alongside having an edge, backtesting it, ensuring that it is profitable, trading it very, very well. Again, emotions is so critical. Now, the reason why emotions are so critical when it comes to trading is because it goes against our biological core when we take a loss, okay? Now, what do I mean by that? Well, instinctively, we are designed to compete at our very, very biological core. Then we're designed to win. So of course, if we take a loss in trading, especially when it comes to monetary terms, then can act very, very much so to our detriment. We can start to feel emotions of sadness, greed. We can start to feel like we want to take revenge. Again, revenge is a very, very important one. It is a natural driver in the sense that if we lose at something, then we do want to get back at something to actually win again, have that chance to win again. But when it comes to the live markets, we have to understand that we cannot control the live market at all, unless we have a very, very large amount of funds. But at this moment in time, we don't. We are retail traders in that sense, so we can't control the market in that sense. So all we can do is work our ways around the market and extract where we can, okay? So again, it does go against our biological core. And this is why you hear people in the early stage of trading, why they're blowing accounts, is because they haven't managed their emotions to a strong degree. They have taken a trade, they may have taken a loss, or a very, very big loss, might be quite a lot of their account, maybe 50% of their account, and they're just like, okay, well, you know what, let me just over leverage, don't have a stop loss, and just go for another trade, and fingers crossed it works out. And before you know it, they've lost their account. Again, they haven't managed their emotions because, again, they've invoked greed and revenge on the market because of a loss, okay? So the question is, how do you manage it? Now, number one, it does come down to experience, okay? So as time goes on, of course, you will get better, okay? So of course, that is one of the obvious answers. I'm sure you guys understand that. But the main way that us as individuals can manage our emotions, especially from the get-go of trading, is to create the correct processes to manage them. Now, what do I mean by this? Well, I'm sure you guys have heard of a trading journal. This is what I say is that when we actually take trades, it is very, very important not only just to write down or keep a log of the details of the trade, but we also want to understand not only why did the trade win or why did it lose, if we can find something in that. But number two, what did we feel when we put that trade on? What were our emotions like, okay? This is so, so critical, because if you say, for example, take 3 trades in a day, and you say take the second trade and the third trade as a response to greed or revenge because the first trade was a loss, if you're able to write this down in your trade journal, then once you review it, either at the end of the day or at the end of the week, you can ask yourself, okay, I felt revenge. Why? Well, I felt revenge because I lost my first trade. Okay, so now if you see this being a repeated habit, if you're doing this consistently where you take a first trade that's a loss and you revenge trade after that, then ask yourself, well, what process can I put in? So ultimately, I'm going down the line of the way to manage your emotion is to analyze the trades, analyze your emotions of when you were feeling, what you were feeling when you actually put the trades on, and from there understand what kind of process can you put in place in order to mitigate that from happening again. So say, for example, in that scenario, if you took one loss and then the next 2 trades are typically revenge trades, then ask yourself, okay, well, if I take a loss, if my first trade is as a loss in the day, maybe I don't trade for that session, maybe I don't trade London, I move on to New York, or maybe I just watch out for 2 trades, and after 2 trades, if I have 2 losses, I walk away from the charts and I don't trade for the day. That is a simple example that you can actually incorporate into your trade plan, just as a good measure to ensure that your emotions are not getting the better of you and you're not taking these unnecessarily losses. So, like I said, once you are trade journaling and you're writing down the characteristics of your trade, and most importantly, in this case, writing your emotions of your trade, what you felt during that trade, how you felt after, then you want to ASR it. And what I mean by ASR is advanced self-review, or review these trades at the end of the week or at the end of each day and ask yourself, why were you feeling like that? Was it a personal circumstance that made you feel like that? Was it something else? Write it down and think, okay, well, how can I prevent this from happening again? Do I need to walk away from the charts? Do I need to work out if I take a loss, for example? Maybe that's a stress reliever for you, who knows? Again, it's all about creating the correct processes through the analysis of the emotions when you've been trading. And that is one of the best ways that I believe can actually genuinely help you to manage your emotions as it goes on, okay? So like I said, that coupled with experience allows you to actually manage your emotions very, very well. Now, I just want to make a quick note, because you do hear traders and very, very good traders say that in trading you have to be a good loser. Now, I see that, but again, I don't really agree with that statement to the fullest extent, because if you're agreeing just to be a loser in trading, then you're just taking losses, okay? But the element of what they're trying to say is, in terms of being a good loser when it comes to trading, is that when you've taken this loss, you are patient for the next high probability, high quality opportunity. If you're taking loss after loss after loss in low probability opportunities, then that is not being a good loser. But if you're taking genuinely good losses in the sense that they are high probability setups and they're not working out, and you're able to handle that and mainly be patient for the next high quality setup, then that is what we mean. That is what we mean by, in the sense of being a good loser. Although I don't really like that term, but essentially we're saying that patience is the key. We make sure that the losses that we take are part of the plan, but also we write down our emotions for these trades, and we always analyze them to create a process to mitigate them from happening again. Okay, guys? So there you have it, guys. I hope you enjoyed this video. That is just a few quick tips on how to actually manage your emotions when it comes to trading. Yes, of course, it is easier said than done. If you are a beginner in the trading game, yes, you're going to feel it a lot more. Believe many people that have blown their accounts. Believe many people that have taken substantial losses. Some of them, a very few amount, have actually come back and actually become great profitable traders. But a lot of them have just give up in the game. But again, if there was just a simple process to help manage your emotions and trying to at least treat the trading game in a professional way by noting down the trades, understanding your emotions, reviewing them, having a feedback system, understanding what you can do, what processes you can implement to actually mitigate those emotions and step away from the charts. Again, all these losses can actually be managed, okay? So again, like I said, number one, it comes down to experience. Number two, the key point is to, in order to really genuinely manage your emotions, is to note them down, understand them, and create processes around them to help prevent them from happening again, just like I said in this video today. So anyway, guys, I genuinely hope you enjoyed this video. If you liked it, please give it a like and subscribe for more awesome content. But guys, if you made any emotional blunders in your trading, feel free to let me know down in the comment section below, because again, everyone does make them time to time. Everyone does have fear of missing out trades or fear of getting involved trades. There is, of course, always some element of emotion when it comes to trading. Why? Number one, it's money involved, and number two, I know that people do want to take it very seriously. But all I can say is that if you do create these processes, you'll find that you're able to manage your emotions much better, and understand that it is better to wait for high probability opportunities than take many low probability opportunities in a shorter space of time. Okay, so guys, I genuinely hope you enjoyed this video, and I'll speak to you guys soon. Take care and peace.